Good morning, inflation update. I'm Rich Potts for Critical Point, Tuesday, May 12th, 9:06 a.m. Eastern Time at 8:30 a.m. Eastern Time. We got inflation report coming at 2.8% core, up from 2.7 annual. Headline coming at 3.8%. It's just rocking and rolling here. People will be nervous that if it core goes above 3, the Fed Reserve will be pushed into raising interest rates. Some people like at Morgan Stanley, a few others this morning talking, yeah, you start, especially if you get it to 3.5, probably going to have to raise interest rates. It'll be a different story than today. Now, today, the core is dragging its feet enough that you can argue there's no reason to raise interest rates now. And so I don't think the Federal Reserve will do anything. I think Morgan Stanley made comments. They don't think they'll raise interest rates the rest of this year even. But got to keep an eye on core. It starts moving above 3%. I think it will. But as it starts at, there's got to be a level up there when the Fed may be pushed into raising interest rates. Our long-term forecast using the business cycle model has been saying since last year that this year on and the next we got rising inflation, rising interest rates. It's just debatable how high, how fast, soon, whatever, some of the sub-characteristics along the way. At any rate, I would say this morning this report supports that, okay? At any rate, looking at this CPI chart, we have a juggler and kitchen business cycle top. Before COVID, we have the crash and burn of COVID and the anticipated timely recession. The model was already saying you're going to get a recession for some reason, but we didn't realize it was going to be something called COVID, okay? Anyway, juggler bottom, kitchen bottom. So the juggler is up like this and can be up into the end of this decade. We could still have much higher inflation, but more likely it'll probably level off. And then the kitchen created a business cycle right like that, okay? And now another one like this. And when we warned it took out this level, we got to be on board of higher, and we were already forecasting higher. And we said, gee, if it starts taking out that level, maybe there's some other problems in the other direction. Well, now it looks like we've got a pro-inflation scenario. Inflation can rise into next year. It's just a matter, does the Fed come in this year to help kill it? They could stall it out, level it off. Anyway, I think we got over 4% inflation coming. There's been government organizations and non-government organizations saying the same thing. I think some of them are looking at 4.3. I don't know how high. I got multiple targets all the way up to 5% or more. But we'll take it one step at a time here. But it looks like we've been on top of this for over 12 months. You may recall back in July of last year, more so first week of August, I said, economy does not look good. I went through a 4-state tour. And lo and behold, the PMI topped in July. It's been downhill ever since. Well, that may pick up its pace and have a little better PMI this summer, which means a little better GDP this summer. But at the same time last year, I said, yeah, and we're also going to fight, however, higher inflation. Well, here we got it with the high oil prices and the U.S.-Iran issue and tariffs, okay, and the list just goes on and on. Something else we're watching is this downtick in employment here. When you survey homes, they have a totally different opinion of where the jobs are going compared to businesses. Businesses are saying they're adding jobs. The household is saying, no, they're not. We're not finding the jobs. The household's probably going to win. So we still have to worry about this K economy of the middle class and poor going downhill in the next year while the rich go uphill into next year. You add the two together, GDP could be sideways to up slightly, actually, but still not a good time. And yet the stock market's probably going to pound out record highs anyways, along with the high inflation, unless, of course, something breaks. And we want to look over our shoulder for that. You better be a subscriber. You better go to criticalpointpod.com. Get on board so we're watching out in case the system breaks. Looking at one of our favorite intraday charts on the S&P 500, and this is actually the futures. It's a 6-hour chart. Due for a level 4 bottom. I say the stock market will be higher tomorrow. It looks like it can be higher in the next week. It looks like it can be higher into July. Problem is, there's also going to be a setback that might be fairly sizable down the road too. So again, become a subscriber, criticalpointpod.com. Get on board here. Right at the moment, my best guess is the market's going to get over this higher inflation number because the core is still not high enough to scare them that could be changing too. All right. At any rate, I think the market has handled this inflation report fairly well, and I got a feeling the stock market will be up tomorrow. Again, go to criticalpointpod.com. Get on board. Thank you. Past results are not necessarily indicative of future results. Thank you.